A little bit of a weird day to say the least. We are getting some leaders, which is good, but if we just take a look at how this is playing out, every single open that we've gone through on the S&P, and I want to focus on the S&P because I want to focus on the cash open more than everything. But if we go and take a look here from Tuesday on, Wednesday, Thursday, Friday, Monday, every single open, it's just net sellers. And eventually this just gets to the point of that, is it too much distribution that we run into a problem? I don't have an answer to that. What I would say to you, what I thought was super interesting and worth pointing out is, if we take a look from this point on and we go to this day right here and just drop from that close, you're unable to get above that. And that's Wednesday the 29th. You got near it, rejection. The open was the high. The open on the cash again was the high. But what you are doing at the same time is wicks or price rejection. So we can see here that this close all of a sudden steps up to this close, and then this close gets up to this close. Why do you care about this? Like, what would be the reason that you would care about that behavior during the cash? And there's really only one reason. It's because it's getting tighter, meaning the sellers of the index are actually drying up into the close. At the same time, the open is getting higher and higher. This is actually somewhat bullish. It's not huge bullish, but it's somewhat bullish to watch that happen. Overall, you still have a lot of damage out there on the breadth, and I'm not really sure how we're going to overcome that. And I'll give you an example what I mean by this. If I take a look at the S5FI, and we just look at this for a second, this is S&P stocks above the 50-day. You're going to note that I just have the trend line pointing down, and you'll note that that's been going on for some time. But on Friday, we actually broke, it's not up yet for Monday, but we actually broke the 40% level, which now means that you have 60% of all names that are in the S&P 500 are now under where they're supposed to be, which is what's leading to this massive volatility. You don't have a foundation. So that's why these rallies are all fading. You'll see a rally and then everyone will be like, oh, we better get in that. And then all of a sudden that rally goes away. I was explaining this in Saturday's video with where we saw this, where we were in this ALAB trade, and then we were watching it trade up. We did quite well with the trade. And then you can just see for a second where just all of a sudden, all the volume just dries up and they're just done. They're like, okay, that's it. Here's your spike right over there. And then you get your little doji, and then we just get net sellers. And it's really important to get this because this is why trading is the way it is right now. Look how little selling there was. People just stopped buying. And then all of a sudden it just collapsed from, roughly the 200 down to 185. Why? Because people just stopped buying. They just didn't care about the stock anymore. And I think that's really important for us to get. They just literally just did not care. It has nothing to do with the company or anything like that. But when the breadth is this bad, you're going to get people that are going to step away. Then in regards to Microsoft, here's a great example. We're not being rewarded for earnings. For example, Microsoft had a great quarter. Their cloud business, Azure, did 37%. Stock's down from there, and 3 months later, you're at the same level. So we could say that, well, that obviously is going to be a resistance point. We can see that, but you're not being rewarded for those earnings. And I think that's super important. And if you miss or you guide lower, man, you have a problem. Like, you have a real problem. So Meta's a great example of this, where you can see this is your year-to-date VWAP, which you guys are going to want to start watching for tax season. By the way, if you're on the wait list, to get into the community, you should have gotten a pre-invite letter the other day, just letting you know that your spot's probably coming up. There's a majority of you that would have gotten that letter by now, so just look for it. And then you should be getting an invite in the next day or two, depending on where you are on the wait list for the majority of people. If you're trying to get on the wait list, links in description. So if you're taking a look at this, you're breaking that year-to-date VWAP, which is not ideal. You've been above it since May. Everybody here I highlighted in blue is underwater. Right? That's why it's in blue. And so everyone here is now underwater, and now you're going into the tax season. So everyone's going to look at this and go, you know what? I just need to sell this November 30th, and then I'll just pick it up January again and get back involved with it because I'm going to take the tax loss here against my gains. And that's how they're going to look at this, which is kind of surprising. I didn't expect that to happen in 25. That wasn't on my bingo card. But you're really struggling here. You're just going through put wall after put wall. The first put wall was 680. The second one was 660. You're just literally running right through them. Why? Because they lowered revenue guidance. And then they also came out and said, by the way, we know we lowered revenue guidance. We know earnings. We had this huge write down that we have to take over there. We know earnings aren't doing what they're supposed to, but we're going to spend more money. And it's okay if you're spending money, if you're making money off what you're spending. And that's where it comes in with names like Google. They're making money off what they're spending. It was a very good quarter. Same with Amazon. It was a really, really good quarter for Amazon as well as it was for Google, right? Like if you had to say who were the winners, they hands down were the winners. But you're not seeing this massive follow through in any of these names. You're having these really weird bars where the only way that you're really making money is just to spray and pray, which just means I'm just going to hold on to it forever and then maybe it'll go up one day. Like no one that's in this at the close thinks that Monday is going to be a great day for them. There's no way you're thinking that. And then if you bought today off the open and you look at today's bar, there's very few people that were in that are going to make money. And really the answer to that is, well, why? If this is your entire range from 59 all the way down to 53 and you close at 54 and look where you open, like not many people are actually going to say, oh, I bought the low versus where it closed. What did you make? $1? So this is where I'm going with this. You're not really making a lot of money here if you're buying these things. And I think that in and of itself is becoming more problematic. Why am I bringing this up? Because the names that are moving are these story kind of names. Like here's a great example tonight. Here's HIMS. And HIMS, this is that put wall at 40. And HIMS was supposed to be, okay. You never know what you're going to get. What's it do? It comes right to the put wall. Test the put wall. Here's the earnings. And then what's it do from here, which is just so fascinating. It holds there, bad earnings. But remember NVO, and the NVO said, oh, you guys are doing shady business practices. We don't want anything to do with you. Guess who's back? Back again. Yep, they're back. And now all of a sudden they want to try and do business with them again. That's why the stock's up $4. I can't wait to hear this suck salad explained on the conference call and how they're going to work through this. But that's where they're at. They're focused on that. So I think it's the storied names that I'm looking for that I think have the potential. Again, I don't see us being overly rewarded for crushing and beating. Now, this is before the conference call tonight, but PLTR, for example, they crushed, hands down. Now, just disclosure, I'm long and I married puts to it, but this is an outright crush. You're up 30 cents. You're hanging on by your fingernails here. Like when I show you this, this was the original pop. You had 1 minute to get out of the trade. After that, you have your call wall sitting here at 210, and they can't get above that. They literally cannot get above that. Maybe they're not going to for tomorrow. They're going to bleed those people out. But then if you go and take a look at something as simplistic as, all right, well, where did we close? So you go to the 359 bar and you just drop it and go, okay, well, that's the close. That's what you're fighting right now. So if you start getting to that point where you can't hold that on numbers like this, and the numbers were fantastic and they guided higher. And if this thing comes down, I get it because the stock's priced to perfection with the price earnings multiple, the growth, the whole 9 yards. And yeah, you could come down and it all depends on how the conference call goes. But the point that I'm getting at here is this crush and it's not enough. So that leads us to go, okay, well, where's the money flow going? To me, the money flow is going into the same few names, and that's just because there's a mispricing. And I think that that's what's important about this. So you're not seeing the broad-based rally, you're seeing a mispricing. So for example, Taiwan Semi's talking about raising prices again for the fourth time in a year. They just have the ability to raise prices. The demand's great. They want to increase. So they're talking about going out there. Here's 4 other names. So the first name that really comes to mind is STX. Now, STX comes out with earnings. The earnings were fantastic. The stock bids up. And now all of a sudden we're wedged in here. And if we look at this level, and I just think it's important to note, what are we really doing here? You're just wedged in here the entire time, right? So 1, 2, 3, 3 closes right in a row. We have this down obviously on Friday from OPEX, but then you're just sitting right in this level. You're not really breaking down whatsoever. I do think that that's important to note, that you're not breaking down here. I think that understanding that they're still buying the storage space, and there's a reason for that, because the whole thing is obviously very mispriced. If you take a look after hours, Western Digital is hitting all-time highs again after earnings. So it's very clear that they still want to be in these names. And I don't really see that as something that's going to stop. And I do think that that's really important to get. So for me, looking at Western Digital, yeah, this makes perfect sense to me. This trade makes perfect sense for someone to say, yeah, I still want to be in this. I see the call wall. I get it. If you start understanding the pricing optics going on out there, and I'll just clean this off. We talked about this after the earnings call because I was surprised that it didn't move. But at 170 since then from earnings, since October, you're at 170 to 235. This is not the easiest chart to trade. And a lot of people are buying these gap ups, gap downs. A lot of this stuff, it's smaller positions and holding because it's just so extremely volatile right now. I don't know that that's going to change, but even take a look at something like a sand disk, and this is that whole drawing that I did for you guys before. But if I look at something like this is what always really sticks out to me about all of this stuff, frankly, and I do think it's important. Look at these little bars down here, 187. There's not a lot of people that are going to be able to hold 188 to 207. There's just not a lot of people that are going to be able to have these kinds of swings and be like, oh yeah, it's fine. 10% swing every single day. I'm good with it. So the swings are getting crazier and crazier, which kind of means change in trend. How that change in trend is going to play out, I'm not really sure right now. So I do think that that's very important for us to watch and try to understand. But from my perspective, I can't stress that enough. It's definitely something that's on my radar. It's certainly something that I would like to pay attention to. So I'm going to pay attention to it. And I think it's really important for us to pay attention to that. I'm just trying to be real blunt here, guys. As much as I like these names, when I look at SanDisk and I look at like Seagate, not everybody is going to be able to go for this ride from 280 down to 243 and say, no, it's fine. That's not very easy to do. So be aware of that. I do think that that's where the money flow is going. I don't see this broad-based rally. As a matter of fact, the only thing that keeps happening is when I'm not selling into strength, specifically selling into strength, I'm just getting stopped out over and over and over again. So I owned this URA and we bought it down here. We just bought it like the 22nd. We literally bought it this day when it flipped. And what I liked about it was just the way that this bar fit, and there's a bunch of other stuff, doesn't matter. But we bought it and then we're just watching it rally and we're moving the stop up. And then all of a sudden I put the stop at 54 and people are like, well, that's a super tight stop for this. It doesn't matter. Because what's happening is we're constantly rolling over and they're constantly whacking us back down. And I cannot stress that enough with the market that you're in right now. You want to take it when you have it. It's a very different kind of market, and I'm really surprised by this because I'm so busy just making fun of him. And like he cares, considering he's the richest man in the world. As he talks about now we're going to have flying cars. I mean, try to get the Cybertruck to work first. But if you take a look at something like this, you have this close here, and this chart's beautiful. And I'm not really sure why. Maybe people do believe in the flying cars. But either way, you continue to hold and ride that line, and I think that's super important. Now, whether or not we're going to be able to get over it when we zoom in on it remains to be seen, but it is there, and it is a very strong move. And I do feel very confident about this chart when I go back and look at it, and it does make me laugh. But that's what we're looking for. We're looking for that kind of chart right now where I could say anything I want. It's the same thing when I look at this Western digital chart. That's how I feel when I look at this. Like, wow, that's a really strong looking chart. Even if we look at something like Micron. And it doesn't just have to be these big guys, but I was looking at this the other day where Pure Storage, you're hitting that 100 call wall. And what I'm doing is I want to show you the differentiation between these grinds and then some of the volatility that we're seeing. So a lot of people are looking at the Metas of the world right now, and they're looking at the Oracles of the world, and they're not really understanding why they're dropping. And that drop is really predicated upon how they're going to fund AI and how they need debt versus equity right now. I'm not going to get all into it, but large institutions don't like that. It's very reminiscent of 99, and they just don't like that. So whether it's factual, not factual, I would argue that it's non-factual, but I don't think it matters. And I'll explain why. So Meta goes out there, issues a $30 billion bond. It was oversubscribed to the tune of $150 billion. So there's huge demand for what they're doing, but it does affect their free cash flow. And this in and of itself is becoming a larger problem. What I would argue in looking at today, I saw some names out there that actually did exceptionally well, like CIFR. They did great today. They had a really good call. A lot of people don't understand that the revenues aren't going to go up as much as the earnings are because they're repositioning what they're doing. The IREN news was fantastic. And when we go and look at that chart, it really, once again, we're opening up and then they're just selling down. So when we look at something like IREN and we look over the past 5 days, all you're doing is opening up. And then what do you really have? So I'll show you what I mean by this again so that you get it. So if I'm opening up here on a Tuesday and I'm like, oh, I'm in, I'm going to buy it. All right. So I'm in at 64 and then I come in the next day and I close at 61, then I'm down. Then the next day I'm at 60. Then the next day I'm at 58, right? So now I'm down like $7 in 3 days. Then it gaps up and I'm like, okay, well maybe, nope, stops at the close, back down to 60. So you're still in this trade. You haven't had one green day and then you gap up again up here and now back again. Here we are again. This is very difficult to hold because it's not where you're going through accumulation. What you're actually dealing with in situations like this is just distribution throughout the day. What I think super interesting about this is the amount of volume that this got today. The volume on this was absolutely huge, and I think it's worth noting. So if I drop a pin on that and look at the volume from here over. This is the highest volume day that we've had, right? I mean, we can see that. So what does that mean? To me, it means that you're going through massive distribution up here ahead of earnings where people are getting out of the trade, not in the trade. It's not something that is great for this kind of name. So this puts me in the same position of saying, where do you put your money, or what spot should you be looking at? Now, when you look at something like XLC, which obviously has the Netflixes of the world into it, we can see how that's acting along that put wall. I mean, it used to be you do a 10-to-1 stock split, you go up. And where I'm going with this is the following. All of a sudden, we're getting good news after good news after good news, and it's not lifting these names. So if I look at something like XLC, and this goes back to when we looked at that positioning, look at the XLC, tried to get through the 55, can't. Now we have a lower low close on the 55. Well, XLC is Charter. So you would say, well, that makes sense. Charter's a dumpster fire. Sure, but how about Netflix? Well, Netflix is down. Okay, it's also Google and Meta. And this is what you're dealing with right now. So if I don't have the XLC, which is the communication services tech side, that's what XLC looks like. How about XLK right now? XLK, which is the tech side, which is your Apple and your Microsoft, that looks a little bit better. Do you have follow through on Apple after that great quarter? Not really. So if I, again, to make this super simple so you can see where I'm going with this, how did you do if you were in Apple for the past 5 or 6 days while all this is going on? You really haven't gone anywhere. I mean, you literally had to buy it, trade it after hours, and go from there. And that's really the part of this market that's just scaring the bejesus out of me. There's no other way to say it. I really don't like when I have to get out that fast. So for example, I was trading PLTR tonight. I had a minute. I literally had a minute. I had 60 seconds if I wanted this. And if I didn't want this and I wanted to hold into this call, this is what I had to do. I had to sell like literally right into it and just get out of the way. And this is the kind of behavior that you're seeing. Now, hopefully this call goes well for everybody that's long it. We get through that 210 call wall. But I do think this kind of behavior is important to point out.